Something like that. Igor was in New Jersey. Cool. Watch the Turkish election? That sounds awesome. Just reviewed your price? Awesome. Or your charts? That's awesome. Well, anyways, let's go on. Like I said, good morning. Today is Monday, June 8th, 2015. This is your daily Forex trading strategy session. As soon as this session is over, I will upload it for your viewing pleasure. The archive is youtube.com/C, and the C stands for channel, right? youtube.com/C/TradersWay. We have a standing rule here. If you watch it, if you watch a few minutes of it, or maybe the whole hour and 15 minutes of it, either way, pay it back, man. Leave a comment. Do just a few seconds. Do it and make your mother happy. Make her proud. Make your mom proud. My name is McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. We do these sessions every day, 7:30 in the morning, which is a couple of hours before New York opens. It says here I go from 7:30 to 8:15. I actually usually go to 8:45. I give you usually an extra half an hour, depending on what's on your mind. And then every Friday we do this at FX Street as well. In fact, on Friday, just the recent past Friday, we did non-farm payrolls live, and we had, I think, 650 people registered for that. Kind of a tricky NFP, huh? Up, down, turn around, all over the place. So let's get going, huh? We've got a lot of stuff to do today. Commitment to Traders Report, go over the calendar, do some technical analysis. Yo, yo, yo. It gets good, gooder, and goodest. Now, let me remind you that trading and investing is risky and not appropriate for everyone. However, your past performance, good or bad, is not indicative of future results. But always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Okay, I hope you can see charts. Let's just do some technicals, and then we'll go through the calendar, then we'll do some COT. And I think our Forex trading bellies will be full, and our brains will be fat, and our eyes will be keen for the market. Beep. All right, let's do USD Kitty Cat. We've been watching this for many, many months now. The price action did lead us down. Okay. Worked our way down from breakout, retracement, consolidation, top of the range, bottom of the range, breakout to the other side, retracement, breakout to the other side, retracement, and just kind of moving a little bit sideways here. This green zone is a possible buy zone if the trend is to continue, because once again, I think we're closer to support than resistance. Are we touching support right now? No. But the oscillator says on this time frame, oh, well, maybe soon. Not quite yet, but it'd be interesting if it spiked down today and then wanted to work its way up. So it says here, the guesstimate here, within the next 12 hours, we might be at support, ready to look to go long. So what are you going to do in the next 12 hours? Well, let it set up. I want to caution you, though. It also tells me that it's not going to be the one that breaks us to the upside, because there's still, on the daily chart, room. So what I'm thinking is sort of down and then sideways for 36 hours and then long. So today's Monday to Wednesday morning London time we're long. Could be a rabbit, could be. And mine would be like that. Okay. Someone says already long CAD. Well, that's cool for now. On the daily, on the 4 hour, yeah. I mean, look, I said it could be down for another 12 hours, which means long CAD, right? Okay. Well, it doesn't seem bad to me. Okay. This no so good, but it's moving sideways. Let's go to the hour. You know, I don't know. So what were you doing then? You had it like this? Well, the problem with that is I don't even see that as a fib level. Just wait, you probably had it marked this way. I just see what you're doing. Well, that's the end of it, right? No, I don't see it. It's fairly aggressive. I guess it's 382. What you were doing. It's modest. Is there a psych level in there? 24. I don't quite see what you were doing there. Yeah. Ken says, "Hey Wayne, that's a very very precise prediction." Well, what would you like from me, Ken? Like vague predictions? Well, it might go up, it might go down. Don't really know. Remember, it's not my prediction. I don't predict anything. I'm just reading the notes. Right? I'm not Mozart, but I'm a trained concert pianist. I can read the notes, but I didn't write the music. So I'm just telling you what the oscillators have told me. That's it. It's not me. Most of the time I'm right. Well, that's my job. Think of it. Right? There's nothing miraculous about it. That's one of the things I'm trying to get across, right? There's I certainly wasn't born to do this. Blood, sweat, and tears for years. That's where it got me. But that's what it says. So it helps to be able to read the charts properly and then have patience and discipline to take advantage of what it says. I can be ready to do what is predictably going to happen. And if it doesn't happen as predicted, I lose a little bit of money. But it should work. Because that's the point, right? Igor says, why don't you think it's going to down? Well, the trend is up. So, again, it's not me. So we're talking about kitty cat again, right? This USD cat. So let's put it out on this, okay? All right. Are we making a series of higher highs or higher lows? Let's see. We were at the bottom, and we broke out of the range, made a higher high, came back, retested the range, made a higher low roll reversal, broke out of the range, made a higher high, came back, retested the range for a higher low. And then, you know, if anything, we're consolidating, but it doesn't matter. We'd still buy at the bottom. And it should go up if the trend continues. So I say, well, is it going to go up on this cycle, which should happen because it's a 4-hour chart in the next 3 or 4 candles? Yeah, but the daily's not ready. So we're going to need a couple of cycles here. We're going to need a cycle up, a cycle down, and a cycle up. Well, how long is that going to take? 12 hours up, 12 hours down. You know, it's just, so I'm lining it up. So we need to take the daily with us. So I'm going to need at least 2 cycles on the 4-hour. That means there's lots of room to drop down to, you know, 123.50, maybe 124. And then I'll drop into a 5-minute, let that cycle down, then or 15-minute, I mean. Wait for it to make a nice low cycle, drop into 5, wait for it to make a reversal pattern, and I'll be long and strong, and I'm done for the day. Boop. Easy peasy lemon squeezy. Okay, USD yen, fantastic opportunity to lose money, huh? So I don't know how to play this one. How are you drawing it, I guess, is the next question. You know, like that. Right? There's another way of doing this. Beep. You can do it like this. You take the good, you take the bad, and there you have. I guess we could play it like this. And generally what I do here is I wait for us to get to the apex of the triangle. Ooh, big word. Which means we want to get really close into this area. And then, you know, I want to see a break above or below. If it breaks out before the apex, it's probably a fake out and is very likely to come back in. So you really want it to continue to consolidate as long as possible. If it breaks out to the upside, it'll probably go to the next level of resistance, which would be in this zone. Then it is likely to come down, and then it's likely to go up to the next level. Or vice versa. Okay, come down to the previous level of support, which would be about there. It would then come back, and then it would continue. Okay? If it breaks out before the apex, it's much more likely to be a fake out. So let's just say, what if it did this in the next hour, today in New York? What if it did that? I would predict something slightly different. It would come back, but it'd probably come back like this. And then maybe, right? Actually, it'd probably do this. If it was going to fake out, it's probably go this way, right? Okay, because it breaks out here, but well before the apex of the triangle. Therefore, it's much more likely to be a fake out. What? No, I'm not predicting direction. I'm not going to say, is it an ace ascending or symmetrical? I'm not saying any of that. Okay? Okay? What I'm suggesting is if we're in an uptrend, it's likely to stay in an uptrend. That's all I'm suggesting. The way you want to draw your triangle, the way you want to trade your triangle, that's up to you. That's your alpha. I'm trying to keep things absolutely as simple as possible. It's going up. Buy it. Oh, but the triangle, Mr. McDonell, the triangle. Dude, it's an uptrend. Why make it complicated? Oh, what triangle? In MT4, you're able to insert shapes. Okay? But I put them on the toolbar, so it's just quicker to grab. Okay? Yeah. Cool. Okay, so you guys are welcome to add layers of complexity on top of what I'm doing. I'm just sharing the very basic. Okay? So my rule of thumb is if we're in an uptrend, I'm looking to buy. I will continue to look to buy until the market has technically reversed. If it's falling, but we're still in an uptrend, then I'm just looking to buy it at support. I'm not adding any other level of complexity to it. But once we get a lower low, lower high, guess what? I'm a bear. Technically. If I'm fundamentally still a bull, I still don't need to sell if I don't want. Just wait till the market technically goes bullish again and then buy in the direction of my fundamental bias. Which means, you know, there are times when I'll ignore a currency pair for 3 months because I'm like, well, I'm waiting for it to go up. It's a little stubborn, but I can do it because I trade on my own terms. Awesome. Okay. We had this thing about euro going up, right? All right. Somebody asked something about euro. All right. Let me clear up some of this stuff. This is old analysis. Oh, what was that? I don't want to kill that. So let's get rid of it. I drew this channel quite a while ago. You notice how now the channel's support and not resistance? Isn't that crazy? It's weird, huh? It was just showing us, generally speaking, the trend was down. And then now we're using it on the other way. So anyways, are we at closer to support or resistance? Well, this channel is acting as support, and this old area here is acting as support. Let me do it this way. There we go. Come on now. Okay. It's not really what I want. How about like this? Okay. So that's in place. See the touch here? And it could be a little wider. I'll use the central. So this touch here, this almost touch here, these touches here, this touch here, this touch here. Okay. Support. When you're at support, what kind of oscillator are you looking for? Well, in this case, one that's oversold and trying to rise. Okay. Well, actually, you know what? Ron says and it was cool because it showed how not to trade or not to trade. But you know what? One of the trade strategies, so we had two trade strategies, right? On the 1 minute chart, look for the green candles, which we got, wait for the retracement, buy it. We never got that one. It never retraced, right? It went straight up, moved sideways, went straight up again. But what was the other trade plan? Trade it back into the range. And in this case, it came all the way back. But whatever. It did regress. Yeah. It happened very late, though, didn't it? It happened hours. I said it would probably happen 40 minutes after, right? But it happened hours later. But, you know, life's complicated. What can I say? So anyways, this oscillator says look to go long or look to go short. What does it say? Only if you're at support. And only if you've made a higher high previously. You see what I mean? Only in an uptrend. In a downtrend, it doesn't mean anything. It's just nothing. So, well, you need a higher high in an uptrend, right? So anyways, we did have some green candles on Friday. Can you see there was a low, then a high? Should be an easy 1, 2, 3, right? Makes a higher high. What do you yell? Hammock. Look, it was a 618 Fibonacci retracement. Cool. Cool. Pretty, isn't it? Okay? And it's supposed to make a higher high, and maybe it will. But I'm going to look to short, and I'll show you why in a jiffy, 2 shakes of a lamb's tail. But read my ellipse. I'm going to look to short here, and I'm going to look to short in here. One of these, see, they're actually all pretty good because there's a pivot cluster here. And there's a pivot cluster here. There's 2 pivots. And then I guess I can just copy and paste that, right? No, I forget how to do this. Control, it's control something, isn't it? There we go. And there's a pivot cluster here, right? So one of these 3 areas I'm going to look to short. Okay? So I can buy now while I wait to short. But I'll tell you why I'm waiting to short. Okay? Let's go to the daily chart. What I'd like to see it do is stay below this peak. In fact, I'd like it to do something like this. I'd like it to kind of come up to that pivot cluster and then fail and get an early turn right around the 75% mark on the oscillator. Okay, and have it down, which essentially is a lower high on the oscillator. Okay, and that would fulfill this pattern of head and shoulder. Right? I don't want to draw the whole pattern with these things. Okay. So that's that's what I'm hoping. Now, if we go higher than our current high here, or higher than this high, then all bets are off. I have to totally wipe the slate clean. That's why I'd like not to do that. It could. I'd rather it not. Oops. How do I clean this up now? Come on, MT4. Can't grab it. Silly rabbit. Oh, I guess this one. Okay. You know, it might be interesting is if this will let me show you the pivots. Won't. Okay. You see? I'd like to keep it lower than that. So let's how should I do it? Like a range, like, so that's kind of the range we're in now. Let me mark that up so that's clear. Okay. And I'd like to stay well within that range. So maybe like this resistance holds, okay? So it's not a prediction, it's more like just what I would like. Because if we get way up here making higher highs, it means we're going to have muddy waters all summer. Does anybody want that? Right. So let's just keep it clean, right? Let's keep this, you know, every summer I don't expect much, but I would like to have like a 300 pip range. So it falls for 3 days in a row, then moves sideways for a day and a half, and then the next week we buy it for 3 days in a row, and then it moves sideways for a while, then we sell it, we buy it, sell it. We're just going through the motions, which is not, you know, not untypical of a summer trade, right? And so, but to me, summer is defined by July and August, basically. Let's say Father's Day. So what is that? The third week of June to about the third week of August. Well, what is that? So Armin says fourth wave of development for the euro. So what does that mean? Up or down? Yeah, well, we already have that. We have it up. Well, okay, up to where? Because I want to make sure we're all talking the same thing. I have it going up too. So are you doing it like this, like 1, 2, that's an expansion wave, 3-wave correction, 4-wave up? I think I see what you're saying. Up into here, then what? Flatten out. That has you flattening out up into the top end of this here, right? Yeah, ABC corrected. Yeah. Okay. Yeah, this part is the ABC, right? AB. Oh, whatever. By the way, I'm looking for someone that is ideally either extremely experienced in Elliott Wave or Elliott Wave certified. I have a very simple job for you and pays a little bit of money. Okay. All right. Yeah. We got. You know what? Let's end the technical analysis here, and then maybe we'll come back to it. But we got a lot to do this week. Let's go through the calendar. Yay! You know what? I wonder if I can get my drawing tool started. Let me fire this up. All right. So pretty busy week. You can see lots of commodity stuff this week. So watch your CAD, watch your Aussie, watch your Kiwi, etc., etc., etc. Okay? All right, so let me get my drawing tool. It seems to be working all right. Let me change the color. Okay, building permits, fine. I don't think CPI. You think that's going to? Yeah, specifically to Australia. Now I'm hoping. I don't expect a huge good number. I don't expect much of anything actually out of that. But it is something to be watching. And I want to remind you what we've discussed many times over what we're watching for. We're watching for inflation, aka money, to trickle down through the European market. So Europe has started quantitative easing. That money increases the money supply in Europe, which basically just puts more money into the banking system. It starts with bond dealers, and then bond dealers put their money in their account, and then banks lend that out, and that goes to other people's account, and those banks lend those out, and that goes to other people's accounts, and banks lend. And eventually, the quantitative easing hits the average Juan on the street, or Johan, and eventually it impacts them, right? And what do? They buy TVs, right? Great. So where do the TVs come from? Right. Well, some of them come from China. So that's what we're kind of looking for. When does Europe stabilize? When does all this quantitative easing hit the average Johann? And when do they start buying stuff with this newfound wealth of theirs? And if that spending is buying products from other countries, in this case particularly CPI, they're buying TVs from China, then China will start to benefit. You'll get Chinese industrial production numbers improving. You'll see their economy stabilizing, their job market stabilizing, and inflation kicking in there once that money starts to flow through. So I don't think we're going to see the CPI data go up yet, but it's something that you should be watching for. And if you do get a good number, you're going to get other traders that are going to try to take advantage of that to make money, because that's new information and that should get priced in. So even if we just simply don't get a bad number, that might be a hope for some, and you'll see the market move in a favorable way. Well, what market would move? Well, if Europe recovers and they start buying junk from China and Chinese industrial production, which I think is more interesting to watch now, because that'll preclude the CPI. It'll happen before CPI improves. But anyways, but once that starts happening, you'll see CPI going up, China's doing better. Well, in that case, Chinese factories need to buy raw material like iron ore and coal, for example, to make steel, to fire up the power plants and stuff like that. But also CPI shows that the Chinese citizens now are probably spending their money. And they might be buying stuff from outside their borders, so on and so forth, right? So we got to track this money all the way around back to China, and then if that number is improving, or if people just think that it might be improving, then they're going to take advantage of that through the commodity currencies, and the best one would be Australia. You see what I mean? So you're looking at Chinese CPI, which won't improve until Europe improves. But when people think CPI in China is improving, they're going to take advantage of it through the commodity currencies like Australia. And Australia will be the one you're buying. Just so happens, an hour or so later, guess who's talking? Governor Stevens of the RBA. Hoo-ha! Nice! So, massive Aussie play here. Or wait, is that the next day? Either way, whatever. Okay, UK industrial production. Okay. See, right now, what's happening with the British pound is it's just not the euro. Good enough. I don't think we need to complicate it much beyond that. And then Carnies. Cool. All right, so it's feeling good, right? So far, we got a really good week warming up here news-wise. And then New Zealand. Interest rate decision, press conference. Lovely opportunity to make money, or at least lovely opportunity to trade a market that is moving. Okay? Remember, it's not on this calendar, but just before that, you will also get the you'll get the dairy auction numbers, and that should also move the Kiwi. So another just like beautiful Kiwi trading day, man. Just lovely. So we're just going to have like lots of great trading. And then what? Could it get any better? How about the next day? Aussie jobs report. Oh, what? I mean, that's one of my favorite reports. So now some Aussie. Holy smokes, eh? So Aussie jobs report. Fantastic trading opportunity. Love it. And what did I like even more? Chinese CPI? Chinese industrial production. Oh, man. Awesome. Because if that is a better than expected number, so let's say it comes out 6.3. holy smokes, Aussie's just going to take off. Probably some kitty cat, probably some kiwi, and they're probably already moving. So maybe, just maybe, we're at, what Aussie dollars, what is it right now? 76? Maybe we're at 79 by Thursday, right? And then what? Here, retail sales. Yeah, you want a good number here. That's all I can say. It's a good number. Dollars rip strong. Right now, it's just all good news. More good news is good news. But I think it could be fleeting. A bad number, no so good. I don't expect a bad number. People around here are spending money like there was never a recession. I don't know about your neighborhood. They're spending money like it's growing on trees. So, so I hope to see a good number here. Weekly unemployment claim, no big deal. Pelosi now, right? Pelosi speaking, very good. So if you guys want some homework this week, what I would have you do is I'd like you to do. I was going to do this with a different tool, but I guess that one's all right. I would like you to pay attention to what Governor Stevens says. I want you to pay attention to what Governor Carney says. Right? I want you to pay attention to what the RB and Z say at their conference. Okay? And I want you to pay attention to what Governor Pelosi says. That's really what I think you should be doing. The rest, you're just trading volatility. Why do we go through the calendar? They're event risk for most. Okay? These are things that can change the market. So if you're in a trend, this is risk for. But it also creates volatility, which might be favorable to your positions. And you could trade them. Okay? So there are event risks and opportunities. So event risk would be threats to your trend that you might already be in. So let's say you were in 9 trades already and you've been holding them for a month. Well, these are the things that could reverse it and you might need to get out or rebalance, right? But the volatility, those are opportunities to make money on scalps. Well, Mark says, where can you watch that? Well, use Google would be my answer, right? Visit all of their websites. Go to the RBA website, go to the BOE website, go to the RBNZ website, go to the BOC website. And also, these things, they will be released publicly as well. So do your research. Okay? You don't have to watch it. I like watching them, but read the minutes, read the reviews, read what did the press say about it. You got to be careful there because quite often the press is wrong. But do something. Because the vast majority of people just look at this and they go, and nothing happens, right? Do something. Change your behavior. Okay? Now, we can adjust the filter here and just see if there's anything interesting on the medium importance. Yeah, they're all interesting. Yeah, it'll be. I think it's commodity currency week, which is pretty cool. Okay, let's go through the COT. Beautiful. What a pretty chart. You guys ready? Oh, yeah. Okay. No change in euro. I mean, just the slightest of change, right? Just the slightest decline in people short, just the slightest increase in people long, but nothing I would say would confirm anything. So my bias is still up for now, down later, right? Right? That's what you got for me, right? Let's just take a look at what's going on. So I said up today, down maybe some other time. Come on now. Come on, MT4. This is just when you have so much information. So since we've been talking, it's been going up. Come on, MT4. I guess I shouldn't draw so much on one chart. It's having a heart attack. Okay. So anyway, as you can see, it's just moving along, monkeying along, la-di-da-di-da, la-di-da-di-da. So that's cool. Well, that's what our plan, our trade was, right? We know on the longer term chart, it should go up for maybe the rest of the day. And I'll look to sell later. Cool. That's cool. It doesn't change. What I see here doesn't change my fundamental technical outlook. Okay, so no red flags. All right, how about the Great British Pig? Okay, dramatic change in price, right? Moderate change in, let's say, just slightly less people long, slightly less people short. Huh. Seems like they're just getting out, doesn't it? Oh, just double click what, a price? Yeah, okay. Thank you, Eric. Okay, so just people getting out of British pound. They're not short. Look at the net change, guys. Absolutely equal. So people are like, oop, it's time to exit British pound. But no change in sentiment, except that people just don't want to be in it, long or short. All right, yen, net short. Look at that. Dramatic increase in net short. Less people long and significantly more people short. And the cool thing is we predicted it several weeks earlier. Very nice, huh? But it confirms it's the real deal, my friend. Significantly more people short the yen and less people long. Perfect storm. Dramatic change in net positions from quite net short to extremely net short. But no reason to be afraid. So, you know, like I would look at that as euro yen long. I don't know about you, right? Oops. Like for example, that. Let's see. Loading, 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 loading. That. Okay. So we're looking at a 4-hour. What do you do in an uptrend? You retrace to the 21 EMA. What do you do? What have I been teaching 10 years? Yeah, you buy it. Typically when it's 5-8 cross up, right? Typically when the oscillator is oversold, right? Well, look, you only had 16 hours to prepare, Igor. Look, it's not my job to put you in. It's my job to reinforce basics that we go over and 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 over again. But you had tons of time. If you wanted to buy it, you had tons of time. Okay? So anyways, that's that. So that the yen looking nice. Let's go to Aussie. What do you think about Aussie? Market has gone net short again. There's been an increase in people selling Aussie as of last week, and a slight decrease of people long. But the RBA statement, the RBA jobs report could change that. Governor Stevens could change that. Chinese industrial production could change that. Because there might be a perceived floor at 75, right? What did we test after NFP? 76. We hit 76 again and 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 again. And then we went to 76. There might be a floor, guys. So like I said, if things, I'm not predicting it will happen because that's a prediction. I'm just telling you what the technical analysis suggests, right? But it's within reason to think if we have a floor established and news comes out just reasonably maybe kind of positive for the Aussie, we're at 79 faster than we're at 75. Right? So I think that's interesting. Like, maybe I show it to you this way. And show this on an hour chart. Yeah. Okay. See what happened? We dropped. And then what? Did it fall off the 21? No. So now what is it likely to do? If the 21's not control, the 55 is, right? So then it's likely to do this. Now imagine if we get good news for the Aussie, or hopeful news for the Aussie. Okay, that's all. I'm not saying it will, but we already had an amazing chance for it to drop like a ton of bricks, right? But the problem is no one else is selling. And the reason for it is Governor Stevens, I don't know when he said it now, 8 months ago, 9 months ago, said it was worth 75. Seems to me we found a floor at 75.50 to 76. And people are saying, well, it's not likely, so maybe higher is the way to go. So people are trading the double bottom, huh? Well, maybe. I don't know. But it seems like you could be planning something here. Ooh, whoa, what was that? You could be planning something, right? I mean, you could say this is the bottom of the range, this is the top of the range, right? Isn't that how you range trade? Well, Oscar, we already established that it's a buy. That's what I'm trying to tell you. Maybe. And then maybe you don't like it on the dollar, so find something that's weak. Okay? Maybe that's your play here. I don't know. Okay? I'd be concerned about this rollover, but play it the way you want to play it. Okay? I'm not saying it will go up. I'm saying it could go up. I look at this and it kind of looks down to me. So be very careful. But, you know, is there something going on here? Yeah, I would say so, right? So create a trade plan. Oops. That's all I've ever asked of you. Just create your trade plan and be ready. If you're not waiting, you're not doing it right. Okay? If you're not waiting, you're in the process of screwing it all up. Okay, Kiwi. Dramatic increase in shorts, dramatic decrease in longs. Wow. Be interesting if it turned long, huh? So you go to your Kiwi now. Remember, I've already predicted that commodity currencies are going to move dramatically this week. Well, if the Kiwi's been down a long time and you think it's at support and you think the interest rate differential is the same, maybe you buy it at support. Right? So it's an M3 R2 week, maybe? I don't know. Okay. Seems like at a bare minimum we'll range trade, right? At a bare minimum. Oops, come on now. I guess I'll do it this way. But maybe, just maybe, get to the next one, which would be more like up in here, right? So that puts us at a 618-1382, which is right there. You see it? 618 to 138. Not my prediction. That's Fibonacci. Leonardo Fibonacci says 618 predicts 1382. Boom. And if that's a trend that continues, then you get a higher low and then maybe a higher high. I'm not predicting that. I'm just saying that's what technical analysis suggests. I would doubt that it would go higher than that without a retracement. And the retracement could be a total reversal. I don't know. Ready up here. I could be ready down there. Capiche? So I kept driving that home at non-farm payrolls. I don't know what's going to happen. How the heck would I know what's going to happen? That's just silly to even think it. but I can tell you what my behavior is going to be. That I can tell you for certain. Okay, and let's round it out with our kitty CAD. So I believe we predicted CAD strength for a little longer, maybe another, what did I say, 12 hours of Canadian dollar strength? Was that it? Something like that? It was a whole long time ago. That was like a half an hour ago. But anyways, we're market neutral. There's that same number of people long as there are short. There's been a slight decrease in people long, a slight increase in people short. But we know that because we've moved from support up to resistance. I did say short-term CAD strength, right, for today. Buy CAD today, sell it tomorrow. Let's take a look. I think I had it here. So USD CAD would fall for the rest of the day, and then we buy it back tomorrow. Oh, look at that. So you could have traded this and made money just since we've been talking. Well, you're welcome. Of course it did, Ron, but the market already knew what it was going to do. It just needed that to come out. And was it disastrous? Was it mega awesome? Think of it. The vast majority of things come out basically as expected. Yeah, it was good. Yeah, fine. You know, it would have had to have been dramatically bad. No, I know, but I have to say it out, right? No, Igor's like a time to buy. I said 12 hours from now, but it's your call, my friend. I'm not saying no. But you have to ask yourself the basic questions. Are you a bull or a bear? Is the market bullish or bearish? Are we at support or resistance? Are we trending or range bound? Should I use an oscillator or a fib? And make a trade plan. What's your trigger? So a lot of people say, like, buy now. What do you mean buy now? That's a meaningless thing to me. Are you at support? Are you bullish? Did you get a reversal pattern at support? Even if I was a bear, what do you mean buy now? Where's my reversal pattern? I'm on a 5-minute chart. Where's the reversal pattern? How about a 1-minute chart? Where is there a reversal pattern? All I know is we're at support. That's all. That's it. What do you mean buy? What's your trigger? You see what I mean? Oscillator oversold at support. Cool. What's your trigger? That just tells you it's oversold at support. So you might say, well, Wayne, I'd like some moving averages on this. Oh, okay. So you'd like to trade a moving average crossover at support when the oscillator is below 75%. Okay, cool. That sounds interesting to me. Let's go to that chart. Okay. Now, I think I said I was interested at tomorrow at London Open, but we'll see. Let's clean this up a little bit. All right, so now we got moving averages. We're on a 1-minute chart. You can't get any more sensitive than that, right? Let's kill some of these indicators. Let's clean up everything. Let's clean that up and delete. Let's even get rid of bits, delete. All right. Now we got an oscillator. We know we're at support. I don't have to look at it. We're on a 1-minute chart. We have a 5-8. on a 1 minute chart, I couldn't possibly buy this. How could that possibly be bullish? Yeah. So Igor's like, well, not on the 1 minute. Well, why can't we wait for it to be bullish on the 1 minute? Oh, it's bullish on the 30 minute. All right. So you could you wait for this to cross into this zone? Could you wait for a 5-8 cross? Could you wait for a higher low, higher high? Right? There's all kinds of things to confirm, but all of this to me right now shows is it dropped like a ton of bricks, it retraced exact 50%, dropped like another ton of bricks, probably come up, make another 50%, drop like another ton of bricks. That's price action. Okay? If it did this now, because it, right? What's the difference in pips? 10 pips different by waiting. But you're set up on a 30-minute to go up for 3.5 hours, right? So all of these are opportunities. I'm just asking you you should already know. Are you going to take this? Are you going to take this? Are you going to take this? You should already know. It's a 1 minute chart. Okay? You could finally buy it at 24, but that's a bet. Okay? And if you do that, so you can see the psych level, right? If you do that, you would like, let's draw this here. You would just bought it blindly at, okay? You would have to have bought it blindly, and then your stop would have been about what? 5 pips? Because the likelihood of you being wrong is almost 100%. Like, how many pips would you, if you're a degenerate, how many pips do you possibly risk? I don't know how you could even measure where your stop would be if it's in a downtrend, how far away your stop should be. Because it could fall indefinitely. I mean, I just don't even get the setup. Well, Igor says, why 5 pip stop? Well, how else do you make the decision? It's falling. This thing's falling. So how do you make a decision? See, like, how about this, Igor? Let me put it the other way. Let's say if it did go up and make a higher high, like I would have preferred, and then it made a higher low, and then I look to go long here, assuming it's going to make a higher high. Now I know my stop is going to be below that lowest low. Okay, so my stop at that point, okay, would simply be below that lowest low. Come on. Look at that, it just won't grab it. There we go. So based on low, I would be long up here, and my stop should be below the lowest low. So I know where my stop is. I did say, after reversal, Igor, I said buy red candles in an uptrend. When did I say buy red candles in a downtrend? Yeah, I've never once said it in my entire life. If you're a bear, Igor, that's what you think it's going to do. So if you were a bear, Igor, you would have sold these green candles. It's called a continuation pattern. Okay? If I'm a bull, I'm going to buy. You understand? If I'm a bull, I'm going to buy, but I buy dips in an uptrend. So therefore, I need a higher high, higher low to buy. So it'll go green, 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 and I'll say, oh, higher high, right? Like that. And then I'm going to say, oh, it's going to make a higher low, probably off of that. Yay! Something like that. Who knows? Okay? I actually like to use this. Okay? So therefore, I will then take a fib, and I'll fib my new high to the previous low, and I'm going to look along somewhere between the 382 and 618 Fibonacci retracement and look at the previous low, which is there. There's my new buy zone, and that's what I would buy if I'm a bull. Keep in mind, this is on a 5-minute chart or a 1-minute chart. It's so, I mean, nothing. It's noise, right? So for example, if I really, 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 really had to buy this and I was being aggressive, this would look a lot better and this would look a lot better than what we had before. Because at least now I could say, I think 24 is support for whatever reason. And I said, well, I waited for an oscillator or a 5A cross 1-minute chart. It's not much, but it's something. But for some reason, I'm unbelievably aggressive today, and that's how it is. Okay? And now, where's my stop? Just below the lowest low. If you bought this giant red candle, I can't imagine where your stop is. So again, Igor, if you're waiting for red candles would be after a higher high. See, what is a trend? I keep telling you, in an uptrend. Well, what's an uptrend? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So where are the red candles? The red candles are going to be in here. Okay? So that's why I'm generally a buyer here, and here, and here, and here. Not before, after the 1-minute 5A cross or 5-minute 5A cross, for example. It's down unless you're unbelievably, ridiculously aggressive, and you're going to buy it because we got green candles off of 124.00000, or if it was a reversal pivot point. But you better be ridiculously aggressive. Where you say to me, Wayne, I thought about it, I did all my research technically and fundamentally, and I'm so unbelievably aggressive that I can't even wait for a 1-minute chart to properly set up. It sounds silly. But but that's your decision. That's your alpha. I'm okay, make the decision. But you can't even wait for a 5A cross on a 1-minute chart? Really? Oh, but you don't like the 1-minute chart. What don't you like about it? It's rude? It insults you? No, don't. Why would you even say that? So don't paint yourself in a corner mentally. It's the same as the 1 hour. It's the same as the 1 day. What's the problem? The only time you lose money on the 1 minute chart is when you screwed up on your 30-minute chart. Okay? If you use a 1 minute chart properly, when you do make the decision, your stop loss is very close. You actually risk less because you have a better entry. Okay? So on your 1 minute chart, you now have a higher high. Sweet. Good job. You predicted it. I'm only suggesting that you have the wherewithal, the patience and discipline to wait for a 5A cross. Was that really that difficult? How much money did it cost you? How many pips did it cost you to wait? Okay? How many pips did it cost you to be conservative, guys? Look at that. It's between just buying it. Because I'm pretty sure when we first started talking that this was the buy that everybody wanted. Right? And then this is the 5A cross, because you're not going to get it at the cross because it takes, you're going to be a candle after. So it's exactly the same price, right? But now I know where the top. And what's the, likelihood of success here versus here? Well, I think it's a much better trade because it's bounced at support. It's given you a cross at support, but just buying it at support alone, I think is incredibly risky. Let's say it's a 50-50 chance. Okay? Let's say it's a 50-50 chance. But it's previously been a downtrend, so I could argue against that, but let's just say it's 50-50. So if you just go long simply because it's 124.000, it's a bet, isn't it? It's a bet, right? I bet you anything will go up. So what if, let's say you have a 3-to-1 ratio. What if we said, if you're wrong, you pay me $10. If you're right, I pay you $30. You might take that, right? Let's change it now. Because you have very little to lose and you have more to gain. You see what I mean? All right. Let's say you put down $1 million. And for most people in this room, their net worth is less than $1 million. So let's say we take your entire net worth. And if you're wrong, you pay me every penny you earn, and you spend the rest of your life in debtor's prison. You lose your all liberty and freedoms. You're locked in a prison cell until you pay me the rest of my $1 million. Or I pay you $3 million. Bet you don't take the trade. Okay? Classic Russian roulette scenario. right? 6 chambers, 3 bullets, pull the trigger, you win $1 million. If you survive. I mean, just all of a sudden, the odds are not good anymore. Well, that's because it's gambling. It only works when the odds are low, or not the odds, what you're risking is low. The odds are not favorable. Okay? And what we're talking about is worth $1 million. We're talking about your career as a currency trader. Your career is worth $1 million. Quite a bit more. Depends on how much time you have. And what we need for you to be worth more than $1 million by trading is patience and discipline, where you control your behavior and you enter trades in such a way that you almost always inevitably make money. That there isn't an ounce of gambling in what you do for a living. Okay? There isn't an ounce of gambling in your trading. And so if your process tells you this market is going to go from bearish to bullish, and that we're in a buy zone with a psych level and maybe a pivot or price action or whatever it is, drop into a smaller time frame and get yourself a proper setup. And the vast majority of the time, guys and gals, the vast majority of the time, the difference in price is almost nothing. Almost nothing. It costs you almost nothing to be more conservative. But the thing is, it ends up being the same trade with just less risk. Because now you're at support and you have a reversal pattern or a change in price, right? Like going price action change. Okay. Now, if you waited to be even more conservative and you bought here after the higher high, right? Now it's changed from, instead of buying it at 124.05, you're buying it at 124.20. So that's a difference in 15 pips. But I bet you it goes up 50 to 100 pips from here, if you're right. And it's to me, if it means a reduction in risk because your probabilities have gone up, and on the long run, guys, and I mean long run, I mean over the course of trading for the next 20 years, patience and discipline are going to keep you out of a lot of bad trades. And this 15 pips you gave up to wait for the higher high, higher low. I mean, you lose that in one trade. Forget about giving it away on one winning trade because you were patient to get a reversal pattern first. I mean, think of how many bad trades that's going to keep you out of. I bet you every time you wait for one good trade, it keeps you out of 3 bad trades. It's my guess. So you give up maybe 15 pips to be patient and disregard a 1-minute chart, but it's going to keep you out of 45 pips, probably a lot more than that, of losing trades. Right? Now, if you add that up over the course of 20 years of trading, it's going to keep you out of a significant amount of losing trades. And you'll be a professional. That's all I can say. You'll be trading. You'll like what you do. You'll be proud of what you do. You'll be interested in what you do. See, currency trading is an intellectual endeavor. It's fascinating. And it's almost always available to you. Right? It's not like you're an oil trader trading in the pits, right? And you show up at 7:30 in the morning, by 1:30 it's done, and now you got to wait for tomorrow. It's a fabulous career, guys. No accounts receivable, no accounts payable. Trade on your own hours. Even in the United States, the taxation is fabulous. It's just a great business. So I think you should wait and have the patience and discipline, even on a lousy, no good, stinking 1 minute chart, to increase your probabilities and to reduce your risk. So anyways, it's been great. It's been what, an hour and a half? It's been a long one. So from the bottom of my heart, peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. And I'd like to remind you, I'm going to drop you on to youtube.com/c/TradersWay. Could you please go to yesterday's or the last video that I've posted and give it a like or leave a comment? And then within the hour, this video will be uploaded as well for you to review. And I'd like you to leave a comment and a like or more, if you will. So thank you for being on my team. Thanks for being with TradersWay. Have a great trading week. I'll see you tomorrow and the next day and the next day and the next day and the next day. Cheers.